And we will bring in our closing panel for Nvidia earnings here as we wait on those numbers. Joining me in studio is Alex Coffey, the host of Next Gen Investing, and George Tsilis is joining us as well, senior markets correspondent here at the Schwab Network. Alex, coming to you here, we've talked Nvidia endlessly. What is the biggest driver today, the biggest potential driver?
Oh, biggest potential driver is going to be the guidance numbers. I think the expectation, if they miss something, that's going to be the biggest driver. But let's just go with the assumption that they're going to meet or probably beat expectations. That feels like the feeling for this name. It's going to be how much is guidance ratcheted up. That's what every analyst has said. It's what people are focused on. It's what the story has been. What I personally am really intrigued about is how they fit the China discussion of their revenue to China back into that equation, because it seemed like it was all going to come back, or a lot of it, and then it seemed like none of it was going to come back again. I think it's somewhere in between. How confident are they to put a number to it? That's what I want to see.
And George, coming to you, the bar is so high for Nvidia. Expectations are through the roof here. How good does it have to be to get a positive response?
Well, that's a great question. You have to treat Nvidia as an isolated stock. It's a very unique company. I suggest, without what Alex says, they obviously have to beat. And I think the composition of the guidance is going to be important. The construction, if you will, of, the data center growth, the rate of change in data center, because that's around 89% of their total sales. I think China is going to be an important metric because, estimates have, all else equal, without any restrictions on sales, between $4 and $6 billion. So that's, roughly 10% of sales. So I think that's going to be, absent any embargoes or any comments outside of, challenges to sell in China. I think that analysts will be looking at that. And I'm also going to be looking at the technology stack. I think there's going to be some interest in the other smaller components of NVIDIA's architecture, which includes the automotive embedded segments. That includes the robotics. So I think that's going to be an area of interest also that analysts may focus on as sort of the next stage of growth for NVIDIA, including, of course, their Omniverse software. And I think robotics is certainly another area of interest that they may end up focusing on as well.
All right, and here comes the numbers. EPS coming in at $1.05. Expectations were for $1, so a beat on there. Revenue coming in for the second quarter at $46.7 billion. Estimates were calling for $46.23. Their gross margins coming in at 72.7%. Data center revenue, which we just discussed would be important, is a slight miss, coming in at $41.1 billion. Estimates calling for $41.29 billion. So, Alex, I'll bring it over to you. We were just talking about the importance of the data center revenue, and I was talking with our previous guest about it as well. It is a slight miss, but it is a miss nonetheless.
Yeah, the reaction makes sense, right? Stock's down, let's call it $8, but really about 10 from where it was just the moments before these numbers hit the wire. These are good numbers, but they're not good enough. And look, this is a company that can maybe thread the needle in something that they're going to say. Looks like the guidance is still really big. Third quarter, their current quarter revenue, they see at $54 billion, plus or minus 2%. This is like 5x where it was, not that long ago. So no one's discounting what Nvidia is, but this isn't a company that's priced on like, hey, just be consistent. It's continue to raise the bar, continue to ratchet up, and at some point, they were going to have a quarter where analysts caught up. So I think it makes sense, but I also expect buyers to come in as they have, because this is just such an important company. So I would expect this to be dampened in terms of price reaction, but it's disappointing. I'd be shocked if this is a stock that's higher tomorrow.
And, George, coming over to you, I'm seeing now they are giving a little bit of detail here about the China picture. They've not assumed any H20 shipments in their outlook here. They are down, obviously, on that data center miss, but they did approve an additional $60 billion in share buybacks. That announcement also coming alongside of these numbers. What are some of your initial takeaways?
Well, clearly the data center numbers are a disappointment because that's the largest constitution of their top line sales. I haven't looked into it too deeply, but, is this a function really of some of the sales that may have not manifested in the quarter because of the embargoes that they face? So that's another thing that analysts will be decomposing once they sort of comb through these figures all together. Looking at top line sales, which did beat, fractionally about $600 million. that's quite a bit when you compare the other segments of the business. And if that's in addition to the automotive and embedded segments, that might be a positive catalyst. But right now, looking at trading down around $6 or $7, it's still within the market maker move expected range, which is around $11.50. But you take these numbers. I mean, every single dollar move in Nvidia is close to 25 billion in market cap. So that's a tremendous move just from the after hours right now. But I do agree with Alex that the data center numbers may not be sufficient to pull this the stock higher tomorrow. We'll see what they say, but it is going to be contingent also on China sales and maybe some additional visibility on China sales to help make up for some of the data center miss, but also the share buyback is going to help. But $60 billion is not a lot when you're dealing with a company that's got 4.4 trillion in market cap.
And they're recovering some now, as we digest these numbers down just a little bit, about 4% here, not as bad as we saw. We are getting some info on Blackwell, though. The Blackwell architecture grew about 17% sequentially. So, some positive numbers there, that Blackwell component important. But, Alex, takeaways as you're getting to look more closely at these numbers. We did have the beats, but this is a revenue story, and a guidance story here. And a data center miss when a data center is 88% of your overall business is problematic.
Well, there's a couple things that stick out to me. And, I was listening, but I was also reading. So I hope you guys haven't mentioned either one of these things. First one is another $60 billion in share buyback. So we're getting to this stage where this isn't to say that this is Nvidia yet. But a lot of times these companies that just grow so substantially and it gets increasingly more difficult for them to continue to raise the bar and performance, they turn to financial engineering. And it's not, and I don't mean that in a disparaging way, but how do you boost EPS? Well, you reduce share float. And that's one way to do that. And it's the exact opposite where companies are struggling and they get a little bit of pop, they issue shares because they want to, get some cash on the books. This is not a company that needs the cash. They're spending the cash on this. But I said that what was going to stick out to me was how does the China situation look? Well, they say no H20 sales to China-based customers in second quarter. I don't know that that was a huge surprise, but it says that, hey, those hurdles that they had to pass, they're not passed yet. And, I know we're in third quarter now, but they don't say anything positive about third quarter sales to China that I'm seeing. And so it looks like that's going to be still a hurdle for this company, and it may weigh on the company performance-wise.
And George, as we come over to you, tepid revenue forecast, we've seen it this earnings season, problematic. Is this indicative potentially of the greater concern that AI spending is slowing potentially?
Well, so it's kind of a tricky situation. I think, when if I'm not mistaken, what Alex mentioned, if they didn't include sales of H20 for the quarter for China, the analysts would have made adjustments for that in their estimates, but they did miss the estimates nonetheless. So, but we're talking about a fractional miss, but irrespective of that, it's still the largest constitution of sales, 88% for the data center. I think there may be some apprehension this quarter in terms of some of the expected sales because of new technology rollout for next quarter. Because if you look at the guidance they're giving right now, and I'm going to look at the high end of the sales at 55.08 billion, estimates were nearly 53. So that's another 2 billion for increasing estimates next quarter. So sequentially, I think that's like 15 or 16%, roughly speaking, sequential quarter growth. So that's where I think when they announced that portion of the guidance for next quarter, the stock rebounded slightly up another $2 or $3. So again, the miss for data center may be just a delayed purchase from one of the bigger hyperscalers. Maybe they're waiting for the next stage technology rollout, so they put it off till next quarter. But again, the adjustment because of the data center miss is really manifesting in what we're seeing in the price action right now.
And, for second quarter data center revenue, it's up 56% from last year. So, I mean, there's no argument that they've had almost unquantifiable growth. I mean, it's just enormous growth from an enormously large company. But Alex, as you're getting to take an even closer look at the numbers, we're doing this in real time, so I'm digesting. What are you thinking are going to be the big questions on the call, or the big things that management's going to have to address?
Look, I think Nvidia is going to feel good about this quarter. This isn't an Nvidia struggling story. This isn't Nvidia needs to be worried. This is a stock price that has just grown so tremendously that at some point it was going to disappoint and it was going to take a step back. I don't think that there's anything here that derails the story. The problem is this is a stock that was trading with the expectation that in line isn't enough. That beating wasn't enough. It was the constant ratcheting higher. And, to take it in sort of a macro way, in 2022, inflation data kept beating by these big numbers that eventually economists just started ratcheting up their forecasts to these really, really aggressive levels, and they over-ratcheted. We've gotten to that point in Nvidia where we finally caught up. You look at the revenue forecast for the current quarter, the street was at about 53.5. Well, they said 54. I don't know how many quarters ago, but these were like 20%, 30% beats. Well, now they're in line. And that's just a very different story that we're talking about. But we're not talking about misses, really. We're talking about in line on already high bars. It's still a positive story.
And, as Alex is saying that, I'm looking at the chart, and now they're just down, just over 1%. So, I mean, the street seemingly in agreement here. George, are you in agreement that the bar is just so high that at a certain point NVIDIA had to level out in some way?
Yeah, I mean, I think the leveling out, the whole concept behind it will eventually level out. I think the data center percent of revenue will eventually decline, but they're going to make up for it in other areas, whether it's, Omniverse software, professional visualization, maybe additional gaming revenues from the gaming chips. But I also think the automotive embedded segment, including robotics, will be another area that's still very small. It's less than $600 million per quarter that is going to be growing. So, this is a situation where it could be an innovation cycle issue, where, again, there was some delayed production of existing technologies as they move towards the next rollout of their chipsets. So that could be sort of a bit of a snag in terms of the data center sales that missed. But nonetheless, there's still robust demand. And you can see that because, as you mentioned, gross margins, I believe 72%. That's about 2% higher than their trailing 4 quarters. So they have pricing power. There's obviously robust demand. So it may be basically a production challenge that they face this quarter, but also perhaps, like I said, a product innovation switchover that maybe some hyperscalers are waiting for Q3. Maybe that's why they actually increased their guidance for Q3 in terms of sales.
And interesting that you point up the automotive revenue. We talk about robotics so much, not necessarily with NVIDIA all the time, and they are a small proponent of their business. But as I'm looking at the revenue increases across their sectors, data center up 56, gaming up 49, visualization up 32. You get to automotive, they're up 69% year over year. So while it is a small component of their business at $586 million, that 69% year over year growth is something, certainly to keep an eye on there.
No doubt. I think so if I'm going to sum things up as I'm seeing it, just kind of high level, we're in the first 10 minutes of parsing through a lot of numbers. They missed in the worst place. Okay, that's the first place to start, but it's a very small miss. It's 0.5% from a really, really high bar that was set. And it's higher than the lowest expectation. So again, that gives you an idea of where we're at. But what else sticks out to me from a guidance standpoint, this sounds and seems very conservative, which is different than the Nvidia that we've seen maybe the last few years. They basically say, hey, 50% of our guidance for data center is big, large cloud service providers. Well, we know those companies are spending because they've already told us they are. So I don't know how worrisome that is. And they also say, hey, no China-based sales, which we've talked about 3 or 4 times already, are included there. Well, that can only get better. They're not going to get to a point where they're paying China, so that can only improve. And we know cloud service providers, the big ones, are already spending. So to George's point, maybe there's just a big order that just hasn't hit the tape yet, and that's what we're waiting for.
George, coming over to you, high level takeaway from the numbers as you're digesting them as well.
Well, high level, I mean, I think the price action right now is appropriate, at least, again, until we get more information on the embargo issues with China, the H20 chip guidance that they provide, I suggest, for the next couple of quarters, because this can change. Then what was the rationale behind, or what's the actual reason? More details in terms of the data center miss, which again was a fractional miss. They did beat on sales, so obviously other segments have made up the difference. But you have to think about companies like Google, just to give you an example, they're increasing their CapEx spend by $10 billion. That's not the total, that's the increase. And that $10 billion, is a lot of money for a company like Nvidia, which, again, if they missed on data center by a few $100 million is really insignificant. So just have to give the context that this is a company that's a tremendous revenue generator. And a slight miss, again, will create a hang-up right now, but I think the rationale and reason for it is going to be important, and that might end up changing the price action tomorrow if, again, this maybe one customer, which there was a delayed sale to, ends up bringing forth the money in the next quarter.
And Alex, a final thought from you.
You know, I wish I could talk as well as George Tsilis, because I think everything he just said, it was just so eloquent and really hits the point. I said I thought that the volatility would dampen. I said I would be surprised if this stock was higher. I wouldn't be surprised, though, if we're closer to unchanged as I've gotten through the numbers a little bit more.
Mm-hmm. Well, Alex Coffey, thank you for being with me in studio. George Tsilis, thank you, as always, for your eloquent speech, as Alex calls it. But I do